Hi, this is Lara at Elliott Wave Stock Market with an extra video update for some US dollar index analysis for you after market close Tuesday 10th of January 2017. The US dollar index is in a bull market. Short term it looks like a small correction is over and the next wave up may have begun. The target for the next wave up to end is 105.98. Let's have a look at the Elliott wave analysis first, classic technical analysis last. For my Elliott wave analysis, I've got more off to the left of the chart, but I don't want to squash it up too much, so I'm showing the end of an ABC zigzag down here, which could be the end of a grand super cycle correction, which means we could have a multi-generational trend change down here and a new bull market for the US dollar index to last generations. The first wave within it, for super cycle wave 1, looks to be incomplete. So far I have cycle 1, cycle 2, a deep zigzag or possibly a flat correction, but more likely a zigzag, and cycle 3 may only subdivide as an impulse. So far it looks incomplete. I think within the impulse of cycle 3 we've got primary 1, 2, 3, 4 and primary 5 is incomplete. When cycle wave 3 is complete, then we'll look for a deeper, longer lasting correction for cycle 4, counterpart to this cycle wave 2 correction. Cycle wave 2 lasted just a bit over 2 years, and so cycle 4, if it's a flat combinational triangle, which would be most likely, should be longer lasting, so maybe 3 or 4 years in duration. So a big interruption to the bull market coming up, but not here yet. The structure of primary 5, when I look at it at the daily chart level, is incomplete. When cycle 3 is done and cycle 4 unfolds, it won't be able to move back into cycle 1 price territory below 89.62. Cycle 2 is very deep, so the upcoming big correction for cycle 4 should be expected to be shallow. Let's have a look at the weekly chart level where primary 1 is this point up here. So now we're looking at more detail of cycle 3. Primary 2 was a zigzag. Primary 3 was the strongest piece of movement. There's a ratio 1.97 longer than 1.618 times the length of primary 1. So that's how you read that detail I've got here. So I'm going to now put a lot more detail on my chart so that it's easier for members to tell what I'm thinking and have a look at the alternation and Fibonacci ratios and what the target calculation is at a glance. Primary 4 is exhibiting alternation. With primary 2 it's a flat correction. It's a little bit more shallow. There's not a lot of alternation in depth, but there is alternation in structure, and alternation is a guideline, not a rule. It should be applied flexibly. Let's have a look at more detail of primary wave 5, and let's see why I expect it's still incomplete. The low for primary 4 at the weekly chart level is this point at the daily chart level here. This is where primary 5 begins. So far it began with 1, 2, 1, 2, 1, 2. Now we've got a third wave impulse complete, so the middle strongest portion of primary 5 looks like it's over. I expect now we've got a first in a series of 3 fourth wave corrections complete, and then we need 3, 4, another correction, another impulse up for another fifth wave, another fourth wave correction for intermediate wave 4, and then a final fifth wave up toward the target. So I expect minute 4 is done now, and now that the bull market should resume, and along the way up toward this target we'll see 2 more interruptions to the trend for 2 more fourth wave corrections. I expect minute wave 4 is complete. I haven't got the labels on this chart for clarity's sake, but I'd label it A, B, C, a flat correction. It's got nice alternation with the either single or double zigzag I expect of minute wave 2, and there's reasonable proportion there. Minute 4 is a little bit longer in duration than minute 2, but flat corrections do tend to be more time consuming than zigzags. The proportion looks pretty good. The target here is 105.98 for minor wave 3 in its entirety to reach 2.618, the length of minor 1. That target would allow for minute wave 5 to move beyond the end of minute 3, avoiding a truncation. The black channel here is a best fit acceleration channel. I've drawn it from the end of intermediate 1 to this high up here, then placed a parallel copy, pulled it down to sit along these lows here. It's overshot here, but apart from that, this lower edge of the channel is quite nicely showing where downward movement is finding support. We might want to add a midline to this channel if price does turn up from here as I expect. We may now be finding support at the midline of the channel, and the rest of this upward movement may sit in the upper half of the channel. When minor wave 3 is complete, at or close to the target, if that's how it turns out to be, then the next little correction for minor 4 can't move back into wave 1 price territory below 97.56. When we get to the daily chart level for classic analysis, we'll see why I expect, apart from the Elliott wave structure, that this little fourth wave correction is probably over. Let's step back though and have a look at the monthly chart levels for some classic analysis, the big picture for the US dollar index. This 40-month moving average looks like that's about where price found support for the last big deep correction, so that's why I've chosen that time frame there. It's still pointing up and price is above it, and so long term a bull market is still indicated, but this is a lagging indicator, moving averages. For the long term it looks like we do still have a bull trend continuing. The positive DX line's above the negative and the black ADX line is still slightly rising. It's not quite yet extreme. Extreme would be 35 or above. It's only just above 29, so there is still room for this trend to continue, but the trend is beginning to become extreme because the black ADX line is above both the positive and negative DX lines. ATR during the last little piece of upward movement has shown some increase, so there is some internal strength or health to that piece of movement, but we do see some weakness now. There's quite strong long-term divergence between the highs of price back here and the last highs up here, between price making new highs and RSI making lower highs. That's some regular bearish divergence that absolutely fits quite nicely actually with the long-term Elliott wave count, which sees a third wave, fourth wave and a fifth wave here. Fifth waves should show divergence with third waves. The third waves are the strongest piece of movement, so that supports the Elliott wave count. Stochastics at the monthly chart level is becoming extreme overbought, but it can remain extreme for quite long periods of time while price continues within a trend, and so that's not an indicator that price has to turn here. It's just another indicator that the trend is moving into extreme territory. MACD is bullish with a crossover here last month. Let's have a look at some more detail at the daily chart level. First up, this is why I expect that this little correction, which I've got labelled minute 4, is probably over. The last time stochastics got close to oversold back here, that was when the last small correction within the trend ended, and it ended just above the midterm Fibonacci 55-day moving average. So apart from this overshoot for this price shock here, this is around about where the short-term corrections are finding support. So price is a little bit above that. If I'm wrong and price moves a bit lower, look for it to find support about this 55-day moving average. And so stochastics looks like it's showing us quite neatly when price turns, with it looking like it might be turning up here. If that continues for another day or so, then I would have a little bit more confidence that this is where price is turning. The short-term average is above the mid-term, which is above the long-term. That tells us that the probability of good things happening is still more likely. The short-term average is pointing slightly lower. That's indicating that we've got a short-term correction within an upward trend. ATR for the last piece of movement showed some increase, so there's a little bit of health there. Again, we've got divergence between price and RSI, and that also fits quite neatly with the Elliott wave count. It saw a third wave, fourth wave and a fifth wave here. Again, fifth waves do very commonly show divergence with RSI and price, or MACD or stochastics and price. We've got divergence with stochastics here as well, and MACD, so that all fits very neatly. Short-term MACD is bearish. Again, that's a lagging indicator because it's based on moving averages, so I'll be using stochastics here to tell us that it's reasonably likely we may have a low in place and price may very well turn about here. That's all from me with your extra US dollar index analysis. You'll find my daily S&P 500 analysis in the membership area of the website Elliott Wave Stock Market.